All right. Good morning, everybody. Welcome. My name's Timothy from Spark Plus, and welcome again to our mining day. Today, you'll be hearing from 4 different ASX-listed resource companies, ranging from market cap of 50 to 100 plus mil. The sequence for today is going to be with Theta Gold Mines, Technology Metals Australia, European Lithium, and then followed by Vault Resources. So if you're logging on to hear from Trevor, you're going to want to stay online for that. But yeah, it's 10 a.m. Thanks everyone for being on time. We're just going to smash through this. So first up, we've got Theta Gold Mines. They've obviously got several surface and near surface high-grade gold projects in South Africa, which, have significant cost advantages to other producers in the region. Now, Bill Guy, their chairman, was supposed to present today. He's actually sent through a quick video to introduce today's speaker. So I'm going to pull that up now. Bear with me. All right. We're going to hear from Bill here. Let us know if you can't see the video being played.
Hi viewers, it's Bill Guy here, Chairman of Theta Gold Mines. Unfortunately, I can't be with you today. When this interview's on, I'll actually be flying, so Richie Yang will be giving the presentation today. I'm sure he'll do a great job. But I've had a great month on the ground here in South Africa. The team was very keen to show me their new discoveries. They found a great new cement-lined stope, which can be used for access to the Beta and to the Iota Reef. So that was great news for us in very good condition. Eskom's just built a brand new power line across all our northern tenements. So Valhalla, Frankfurt have all got access to electricity now. And also that power line will add extra excess electricity to our plant, which is obviously great news. And also me, Finn, and Terence, the directors of the company, spent a number of hours wandering around kilometre after kilometre after the southern extensions of the Beta Reef, and that reef's not even in our resource statement. So that's also very exciting. The guys will be working very hard on delivering that in the next couple of months. So we'll also be completing a definitive feasibility study, Q1 2023, and we'll also be doing trial mining. So I'd just like now to introduce you to Richie, our financial director. We've recently, with his help, raised over $10 million Aussie. So, puts the company in a great position. Richie's done a great job on the financing, and I'll let him take you through the rest of the presentation today. So I hope you enjoy our presentation, and apologies from South Africa.
Excellent. So there we go. Richie, are you on the line? How are you?
Yes, morning team. How are you?
Good as well. Yeah. So I guess, as Bill mentioned, you guys are recently successfully raised over 10 mil with that, significant German investment company. I'm sure you tell us a little bit more about that, but why don't you go ahead and walk us through that preso?
Thank you very much. Hi, everyone. Good morning, I guess, for most of people. My name is Richie Yang. I'm a corporate finance director for Theta Gold Mines, listed on the ASX. We're also tradable on the OTC and the Frankfurt under those codes on the screen. Now, apologies again for Bill. He was supposed to be presenting this one, but then his returning flight from South Africa back to Sydney got sort of switched around with the airline company, so he's actually in the air right now. But I'm very glad to take over from him from this point. For those of you who's not very familiar with the company, to start off with, we are a gold development company. So we're looking to produce gold from South Africa going forward. At the moment, we have 6.1 million ounces of gold resources, and about 10% of that is reserve in growing. We recently put out a feasibility study with numbers. For instance, some of the initial mines we're looking to produce with a cost, all-in sustainable cost of $900 USD. We are looking to build, a solid production base over the next 3 to 5 years towards 160 or plus 260,000 ounces per year. We do hold a large footprint of grounds 620 square kilometers in South Africa, which I'll get over to. So really, on the ASX entirely, players with 6 million ounce above resource numbers, currently not yet in production. I think there's only about 3 of us. We are one of them. Some disclaimer, which I'll show later. Now, South Africa, I mean, recently, the last couple of weeks, I'm sure the country sort of popped on many people's screen, especially by the media. So the number one question, I guess a lot of you will ask today is how are you doing? How are you guys doing over there? Is everything okay? Is the country going bust? How is the company, its operations? Are you guys affected indirectly or directly? Now, some sort of snapshots here of the company's Twitter account over the last couple of weeks. So Bill, our chairman, he was on site from Sydney over there for about 1.5 months. The day, I think about the 3rd or 4th day after the riot in some areas in South Africa, he sent me a number of photos. This is one photo of him really in the mall in Cape Town, just to show you life is as normal on the 18th of July. The bottom one is around the end of July after we secured the $10 million funding from the German investor. On the right here is our CEO, Mr. Mundane, and on the left, our chairman, with other directors and senior management in the background about to go underground. That was an interview they've done with the Market Herald in Australia, obviously via Zoom meetings. Also, some coverage in the Proactive Australia after the funding as well. So just in summary, the company is operating as normal. The riots, obviously, in South Africa really happened in a number of sort of specific places. It was really an opportunistic approach by some of the former presidents who was impeached, as you know, and their supporters in the Gupta's family. But for most of the people or companies in South Africa, business as usual. A bit of update where we are and a bit of background with the company's market capitalization, etc. So at the moment, after the recent raise we did, cornerstone by a German investor, we are on about 516 million shares on issue. Around on top of that, about 55 million worth of unlisted options and management performance rights, roughly half. The company market capitalization as of last night, roughly we're just above 100 million Australian dollars, and the register is relatively tight halt. Now, what was the deal we've sort of completed lately? It's backed by the Deutsche Börse AG, who's listed on the Frankfurt. It's a large German investment company. It's a sister company to its Delphi AG, who's owned by I think a German billionaire, Thomas Soros. They were very active on the ASX as well as the TSX over the last 3 or 4 years, especially in the junior mining space. On the ASX, they are a major shareholder behind almost a dozen junior gold companies, and we're very fortunate to win their sort of support going forward, starting with a 6 mil secure bond to them with a number of options that's out of the money. It's 27.5 and 40 cents. We're trading around 21 cents at the moment. Also, the equity raise above, on top of the bond, out of the 3 million, they basically underwritten 1.5. Out of the SPP we're looking to offer our shareholders, they've underwritten 2/3 of that. So we're very fortunate, glad to have those guys on board. A bit of background again, with where we are. South Africa, we're at the northeast corner, where in the middle here, I didn't draw it out, but if you can see the color here, it's the world-renowned Bushveld complex. You have the Witwatersrand goldfields region, having produced about 40% of the entire global gold supply. To the about 400 kilometers to the east, you have the Barberton Greenstone goldfields. A number of companies across these two gold fields. You've got ASX-listed Westwoods, recently also secured some financing. DRD Gold, who's a producer of about 180,000 ounces, listed on the New York main board. And the Pan-African Resources, who is also producing about 70,000 ounces per annum, listed on the London Stock Exchange. So we are to the north, about 100 kilometers north of the Barberton area. We actually control and dominate our own gold fields called the Eastern Transvaal gold fields. So currently we're sitting on 6.1 million ounces resources and aiming to produce 160,000 ounces plus of gold. Some recap after our, so this, to the left here, a PFS that we put out to the market after or post the funding we did back in March with Spark Plus here. Omar and the team. So the PFS, some highlight number to highlight. It was done on the back of 1570 gold price USD. As we know, current gold price is still above 1700. It was done on the back of the initial 420,000 ounce gold oil reserve underground in our region. So we've from those two sort of parameters, we were able to map out a 7.6 years mine life, producing between 60 to 70,000 ounces of gold per year, with a very humble startup capex, 36 million USD, generating 240 plus million EBITDA and a net present value, again, on those gold prices, just around 100 million USD dollars. Again, the initial number of mines we're looking to produce has a very humble all-in sustainable cost of 900, if not less. It does allow us to sit on the bottom quartile of the South, among other South African producers. This morning, about 2 hours ago, we managed to put out a small update to the market of where we are and what we're looking to do post to the recent 10 million funding before end of the year. So as you can see, the team from the pictures before, the team are busying with the underground sampling work, work leading up towards converting the previous PFS earlier this year to a DFS, definitive feasibility studies. We are, the PFS previously covered 3 underground mines. We're looking to add another one into the DFS, so to beef up the numbers a bit more. So those numbers will be reduced, announced to the market in due course. So the announcement is actually out there in the market. May have a read, spare times. But most importantly, some of the key work we're looking to do. Number one is underground trial mining. So the guys are pretty much getting ready with the rigs secured from Port Longyear, S36 underground drilling rig. To go down there. So we're looking to, through this process, to increase potentially more our mining resources, our reserve, and put out a better sort of number DFS to start off with. Again, this it was just a chart we put out earlier this year to show that our initial projects are sitting on the bottom quartile among other South African peers. Some presentation that we have was the slide that we have actually used in the past. Some of the equipment we're looking to use going forward for between production and also ongoing on reef exploration, just to show why this project is actually quite outstanding. In old days they were mining a pay limit of 18 grams per ton product, and nowadays our pay limit above 1 grams. But we're looking to produce an average of 5, 6, even 7 grams sort of ore from the reefs. A few photos from Bill's trip, really last couple of weeks with the team over there. I think he showed in his video last night. Our COO, our CEO, as well as the GM, also the mine manager, all 3 gentlemen were from Harmony Gold organization in South Africa. Bill in the middle, our other 2 directors in South Africa, Terence Macau, who's working at the moment with Glencore, as well as Sibanye Stillwater, and Finn, who's been a banker as well as a mining engineer for most of his life. As you can see, the guys have been busy underground planning what's next for the organization. This map here shows our the northern the tenements of our tenement package, where the plant sits right in the center here. So if I take out the topography, just to sort of zoom into the center part here, I couldn't show the plant, but the plant actually sits in the space over here in the valley. To the west is the beta reefs, currently on about 1 million ounces resources. About 1/3 of that is mineral reserves. Upwards, it's a CDM mine that's also part of the feasibility study we put out before. An area to the south of Beta, where the gentlemen took their photos together this month or last month, are the new areas we're looking to sample from the previous production database, looking to add into the production schedule / mineral resource tables. Some highlights, given the limited time today, so just sort of wanted to highlight some of the key factors of this company. Number one is really the size. There isn't many 6 million ounce pre-developers out there, either on the ASX or TSX. So we are starting with a 6.1 million ounce sort of base, which is a good place to be. Potential is there. The grounds being together intact, all these tenements over the last 130 years. Over 40 mines recorded high production records that we have in our database. So for us, it's not a sort of blindfolded exploration going forward. It's really a lot of data mining into the previous development phases and production records, able to add onto the 6.1 million ounce today potentially. Immediate value, we believe the company is definitely undervalued. On today's market cap, we are basically trading around 20 USD, if not less, per resource ounce. Whereas most of the transactions in the market is done over $50 per resource ounce. So if any majors wants to offer us to buy out either the company or its resource today, there's an immediate sort of value, potential value uplift just compared to other transactions in the market. Growth, we are looking to start from about 60,000 ounces per annum, and over the next 3-6 years, we'd like to grow that production profile significantly. Very experienced team, as I just introduced the team to everyone. Flexibility is quite important. We're not producing from one mine, so it's actually from 3 to 4 mines initially, and then growing that number gradually as well. Hence, that sort of approach will be able to limit our risk, with anything to do with operational risk, or even the risk of another route that you guys probably saw in the media lately. But in our case, we're pretty far from the cities. We're actually in the mountain area. The nearby town only have a population of 5,000. Another town next to us is about 30,000. So we're actually, where we are is quite remote, but quite sufficient in terms of everything else. So we have access to people, infrastructure. Timing is everything. I think Bill showed this slide last time he presented to some of the audience here. It's very important to understand where this company or Theta Gold sits. We are sort of finished came out of the initial resource sort of a ramping up resource stage. Even the share price you saw before, we are currently had a recent pullback, just before mid-year. But now funded to basically get most of the job done pre-production. Myself and also the team and new CEO, we are actually working quite aggressively with a number of financiers out there, looking at the numbers of how do we finance the 30 USD we're looking for to start production. Okay, I'll probably hand over the key to you, Tim.
Yeah, sure. So we had a couple of questions come through, and I'm sure once we start getting the ball rolling, more will come through. So the first one was, the resource is huge at 6 million ounces. I guess why hasn't the Australian market, valued it, like you were saying before, $50, I guess, per ounce, right? If this was a resource in Western Australia, you'd be probably what, 3 times the market cap. I mean, what are your thoughts on that, Richie?
Yeah, I mean, in terms of the market cap, number of factors I could sort of base on our experience. Now, earlier this year, we have traded at as high as 40 cents, so roughly towards the $30 per resource ounce mark. We had a pullback recently. Obviously, everyone has. One of the reasons is really South African factor. South Africa never had a proper valuation in Australia over the last 3 to 5 years.
Yeah.
But recently, we had some improvements, including our company and Westwoods I showed you earlier. So Westwoods, with about 4 million ounces, they're sitting around 90 million market cap. So we are just above 100.
Yeah.
The difference is they are actually going to mine one mine, but then shaft operation underground. Whereas for us, it's a number of mines, but in the same region, near surface from the side of the hill at entry, so horizontal mining. So really, the South African factor is one thing, but we believe we can change that. But it takes a bit more time for the market to understand, okay, these two companies or Theta Gold itself will start to catch up to some of the successful companies out of South Africa, such as DRD Gold, mining the surface tailings, as well as Pan African Resources mining underground and tailings projects. So we believe that the uplift potential is definitely there. I mean, at least double, triple from today's market cap, just to get ourselves back in line with the market. Secondly is really, I think this COVID thing does affect, because conventionally we would have invited a lot of people on site already. Every year, as you know, those of you familiar with the mining, Cape Town hosts its mining in Durban in February every year, and we're always there. And usually we organize brokers or fund managers, analysts to come for a site trip, after or before that convention. But last year and this year we just weren't able to do it. Well, last year we had a chance to do it, but before this
COVID, I guess.
We just can't do it. And even conventionally, no one wants to sort of risk at this point to go to South Africa in terms of the COVID situation over there. And we know a lot of people who's had it, but most people sort of came out of it without even taking any medicine. It's really a battle, as everyone knows, between our own health and COVID itself. So a number of factors that that sort of made us a hidden gem, I could say.
Agreed. And we might just do one more question, just for the sake of time. It's the investment from the German investment company. How does that work? Is it a convertible? Because I know it was announced as a secured bond. How does that work?
Yeah. So conventionally, the Delphi AG / Ballerton, Deutsche Ballerton Group, conventionally on the ASX, they usually just do straight long positions, equity injections. In this case, they did it through one of the newest investment vehicles, To Invest AG, which is also listed on the Frankfurt. The only reason they structured a bond, this deal is actually mirrored off another deal they did last year with another ASX listed company called Horizon Minerals, HRZ, another gold company. So they came out. They were able to successfully utilize those facilities with these guys and grow the company to this point. We believe similarly we can do the same. The thinking behind it, there were options, out of money options, 27.5 and 40 cents options attached, as part of this bond deal, which obviously the intention from them is potentially to come in big on the equity side as well. So, but just for everyone's comfort, this deal from them is not only a bond or not only a debt, they're also injecting 2.5 equity along with the other investors.
Oh, beautiful. Yeah, no, it's always, I guess, it shows confidence in the investor, in TGM. So no, thank you. Thanks for presenting to us today, Richie, and taking our questions. Just now his contact details were up there. But if you have any more questions for TGM or for Richie or for Bill, feel free to reach out to us or reach out to them directly, But thanks again, Richie. And
thanks, team. Thanks, everyone.
We'll catch you soon.
Bye for now.
Right. Up next, we've got Technology Metals Australia, the managing director, Ian Prentice. He's no stranger to presenting at our conferences. But for those who are new to TMT, they're developing the Yarrabubba iron vanadium titanium project, as well as their Gabonintha vanadium project in Western Australia. So fully owned by TMT, specifically, I think, high iron vanadium rich magnetite product. But I'm going to hand the time over to Ian, who's going to be able to explain it a lot better than I can.
Many thanks, Tim, and thanks to Omar and the team at Spark Plus for giving us the opportunity to have a chat. We're all about delivering the world's next primary vanadium mine, and we've got a very clear strategy about how that's going to come through. Very much a strategic commodity focus, as Tim was mentioning. And I guess straight into it, why invest in TMT? So, we've got strategic projects in a tier 1 jurisdiction here in Western Australia, the Gabonintha vanadium project, which is really our flagship project. DFS delivered back in 2019, fantastic metrics, which are up on the screen there. So, very strong EBITDA over the initial 16-year mine life. Interestingly, the NPV of $663 million based on a $8.78 vanadium price. We're currently sitting at around $10. So if we plugged in $10 into our model, we'd be over $1 billion NPV at the moment. And in a minute, I'll show you where our market cap is, and you can see that valuation uplift between those two. We've made some really good ground with offtake. So 75% of our average annual production from Gabonintha is covered under either binding or MOU offtake agreements, and I'll go into a bit more detail around that as well. But what we're looking at is this stage development strategy. So Yarrabubba Iron Vanadium Project comes into that stage there. So that's going to be stage 1, where we're looking at a modest capital development. It's right next door. It's about 10 kilometres away from Gabonintha, the same ore body. We're going to use the same infrastructure that we'll develop at Gabonintha for Yarrabubba. Around 1.5 million tonnes per annum of high-grade iron ore, 64% iron with 1.5, 1.6% vanadium pentoxide credits to it. And we're in the middle of a feasibility study on that as we speak. So we're looking to deliver that at the end of this year. So key around all that, I guess all that confidence in being able to be the next vanadium project in delivery of all that, obviously financial metrics and the quality of the projects, but very, very importantly, we have granted mining leases, and by the end of the year, we'll have our environmental approvals in place for Gabonintha as well. So all those key variables around permitting will be in place for us to move, make this project shovel ready. Regionally and nationally significant projects, so we've got fantastic government support for the development of the project, key commodity, critical mineral, so we'll be accessing funding through groups like NAIF and support from the federal government to develop the project. And the last bullet point is what I've been talking about now, really implementing this cost-effective stage development strategy, which aims to, step through the capital requirements to get to the main goal of developing what's now a $1 billion project with a vanadium price that's very firmly in our sales. So the corporate overview: we've been listed for a bit over 4.5 years, 150 million shares on issue, so we've kept that structure nice and tight through that time. We had a touch over $5.5 million in cash at the end of June, so that we did a capital raise back in November, December last year, and that was the funds raised from that were really aimed at progressing the Yarrabubba definitive feasibility study, and we're so well on track for that. The market cap as of it closed yesterday about $54 million. Then I refer back to an NPV just on Gabonintha alone, currently sitting north of $1 billion, and then we'll bring Yarrabubba through as well. So clearly there's a big valuation gap there. Really strong supportive shareholder base. We've got 49% of our register held by the top 20 shareholders, so it's a really nice place to be. Important around our the ESG components of what we do. It's been a focus since the beginning of our time on this project. Obviously clear focus on the environment and making sure we're developing in a sustainable way. the benefits for our community that we're operating in, both the traditional owner community, but also I guess the European community in the area that we're operating in. We're going to be there for a long time. We've got a multi-decade operation, so it's really important that we're part of the community, part of the development of that community, and they show their support for what we're doing. So a real clear focus all the way through of what we've been doing. Obviously, it's become more topical in the investment community of late, but I guess from our point of view, it's something that we've really focused on since the get-go. Now, a bit on vanadium. So it is a critical mineral, and it's going to be a very important role to play in moving to net zero. The net zero 2050, we're all very focused on reducing emissions and how do we achieve that. So vanadium is one of the minerals that is going to play a very, very important role there. So predominantly used in steel. So 90% of vanadium currently goes into steel. And as it says there, strengthening steel by putting a bit of vanadium in means you can use less steel for purpose. So therefore you're burning less coal to make that steel, so your emissions are reduced. So it's got a really strong green credential in its current use. But where we see the real growth long term is going to be into the battery sector. So the VRFB, long-term stable storage, so fantastic solution that paired with renewable energy, so with your solar farm, your wind farm, but also has some real benefits in just general grid applications. And so a fantastic, and there's another slide a bit further in, I'll talk about a bit more, but also, I guess, importantly, the slide, the price chart showing where the vanadium price has been over the last 12 months. And we had, coming out of the worst of the economic implications of COVID, the back end of 2020, and then started to see economies starting to recover into 2021, and we've seen a fantastic increase in the vanadium price. So we've effectively doubled the vanadium price in the last 6 months. Very much driven by a really tight market in China, which is the biggest consumer of vanadium, and then that's been exacerbated by the European and the North American markets coming back to life and starting to require vanadium and taking it out of that Chinese market. So we've seen a really, really strong recovery there. And that's only going to get supported more and more as more stimulus spending, more roads, bridges, buildings that require steel, more focus on renewable and moving to net zero. The spending that's coming out of the US with the current government and current president really pushing this focus on establishing better and better use of renewable energy and how that's going to tie in with really good stationary storage, which is the vanadium redox flow battery. So there's a few words on there which really, I guess, highlight the benefits of these as a large long-term stationary storage solution. Certainly far better than lithium for purpose. These are a 20+ year type of solution. They don't degrade over that time as opposed to a lithium battery. And one of the real benefits is that safety, the middle point there. These don't catch on fire. We've recently seen a number of fires in lithium batteries. There was a bad fire in China within a shopping centre, which caused some fatalities. We've had a fire just recently down at Geelong in a lithium-ion battery. That they can be unstable. They can be a risky proposition. Vanadium electrolyte batteries don't have that thermal runaway. They do not have that safety issue at all. So much better solution from a safety point of view. And then sustainability. So the vanadium that we put into these batteries at the end of the battery's life is pretty well 100% reusable, recyclable. So you can take it out and repurpose it for the steel industry, or you take it out and repurpose it for a new battery. So a fantastic solution and gaining a lot more, traction in the market. Now, this is a snapshot from the Vanadium Industry Group that shows the vanadium battery deployment around the world and what's planned to be deployed. There's some very, very large batteries going into China and into Japan, and some are being developed, some are on the drawing boards, but there's a lot of projects that are happening. And you can see on the left-hand side there a whole list of countries that have got batteries deployed. And this is a real key thing for the vanadium redox flow battery. I think people don't really understand that these things are actually out there operating as we speak. So it's not a brand new technology that's trying to develop. It's developed, and now what we're doing is commercializing it and rolling it out. And so TMT is going to play a very big role in that, based on our Gavin into Vanadium project. Again, just a bit of a snapshot of some of the big installations around the world that are happening at the moment, and some numbers there about the capacity requirement just in China itself for storage and what that impact of that on vanadium consumption. You can see there's a huge amount of vanadium that's going to be needed to feed into these batteries. We've got a very high level of engagement with a number of vanadium electrolyte producers, and the amount of vanadium that they are talking about requiring in the short term is quite mind-boggling, to be honest. So our production rate is around about 13,000 tonnes per annum at Gabenintha. Some of these guys would have requirements for half to two-thirds of that just individual vanadium electrolyte businesses. So it's a really big developing market. Just I guess quickly on the projects, Yarrabubba, that's our starter project. This is the way we're going to step through into developing the long life Gabenintha project. Bottom left-hand corner, bottom right-hand corner of that plan shows where Yarrabubba sits, around a 28 million tonne resource currently there. We've done a lot of drilling over the course of the first half of this year, and we're in the process of bringing that into an update of the resource, which will flow through an update of the reserve. Importantly, we're focusing there on getting a larger proportion into indicated and measured components, and therefore being able to deliver a larger reserve. But you can see importantly there the high grade component of the existing resource, around 14 million tonnes at 48% iron and 1.1% vanadium in situ. So quite, for a magnetite deposit, quite a high grade, and obviously that credit from the vanadium. The test work we've done to date is telling us we're going to be delivering something in excess of 63% iron and a really good vanadium credit there. As a magnetite product, you get very low deleterious elements, so it makes it a very, very attractive product. And again, in an environment where we're pushing towards lower emissions, most of the steel producers are looking for higher grade inputs. So the 63, 64% iron becomes very, very attractive from that point of view. We also, interestingly, get from our tails from this process, so we do a magnetic separation, produce a magnetic concentrate, 1.5 million tonnes per annum. The non-magnetics, which is basically our waste stream, we're now being able to deliver a titanium product. So test work is lagging a little behind our iron product, but we've done some really interesting work in this space, and we're looking at being able to deliver a very attractive titanium product. We don't know the exact quantums as yet, but it's probably 100 to 200,000 tonnes per annum of this material. Very, very attractive in a market that at the moment is very, very tight. The titanium market is incredibly tight. So we're getting a lot of interest in the potential for our titanium product. Just a little bit on, I guess, the technicals of this. It is a magnetite, but it's a different magnetite. So as you see in the cross section, good widths of high grade mineralization. We'll be mining all of those units, the orange, the pink, and the blue. So all will be going through our circuit. Some of the key differentiators, the top one's really important. We don't do a really fine grind. We're talking 75 to 90 microns, so quite a coarse grind for a magnetite deposit, which means less energy requirements, less water requirements to get down to that finer grind that you typically would get. High in situ grades, which I've already touched on, we get very high mass recovery. So we're talking around 40 to 50% mass recovery into a concentrate. So that's double what most typical magnetites are looking at. That all leads through to very low risk processing. We've touched on the high quality products. We also then, as I say, it steps through. We're relying on a lot of information we've used for the Gabenintha feasibility study, supports the Yarrabubba feasibility study, because we'll be building our circuit for Yarrabubba at Gabenintha. So all of the water and infrastructure that supports the project has already been studied. So that really helps fast track the Yarrabubba feasibility study. They're all the activities we've been doing and we're progressing through. I've mentioned the resource and reserve upgrade. We're doing pilot test work as we speak, and that's a program over the next few months, which is going to really confirm our flow sheet and deliver some samples for customers, and importantly, environmental approvals for the mining side of Yarrabubba. So the approvals already well and truly progressed for the Gabenintha development of the processing circuit, but the environmental approvals for the mining side. I know, Tim, we're probably running out of a little time, but just quickly on Gabenintha itself. There's some metrics there in the little icons talking about the size of the resource and the reserve. 28 million pounds per annum would put us at around about the largest single primary vanadium producer in the world. And those costs are around $4 a pound, right down there, lowest quartile. We've done some work post DFS, which is going to push that number down, and it's going to have a 3 in front of it, and that's going to be very important for us. Just a little bit on this. very robust DFS, fantastic life of mine revenue as it stands now. So that's based on $8.78. We're now pushing $10 a pound. So all those numbers increase quite dramatically. The average EBITDA at current prices would be pushing up to 250 million Aussie or thereabouts. So very, very attractive proposition. 16-year mine life initially. We've got fantastic opportunity to extend that, and as I say, will be a multi-decade operation. Very shallow oxidation, which is one of the keys as to why we're so low cost and have some really attractive metrics. Very, very important for these projects. And when you're comparing vanadium projects around the world of this style, look for oxidation profile, because that's a very key parameter when you're looking at developing these projects. And we're very fortunate that we have very shallow oxidation both at Yarra Bubba and up at Gabenintha. So really important. Just quickly on our customer engagement, this is focused on Gabenintha. So we have a binding offtake agreement with a China non-ferrous business in Ningxia. We have some MOUs. So both CNMC and Shaanxi Fengyuan are tied to the iron business. So that's getting vanadium that goes into the steel business. Big Power and LE System are really the exciting ones where the future is. So we've got a fantastic technical collaboration happening with LE System. They're the leading edge of electrolyte production. They've got some of the best technology in the world on vanadium electrolyte production, and we're developing a partnership with them to look at downstream processing of our product here in Australia to support the Australian business and Australian rollout of vanadium redox flow batteries. So really exciting. Hopefully we will have a bit more to say about that in the coming period of time, but that's a really exciting place to be with those guys. And then, who's in our corner as we progress the development and what stages are we at? We've got the WA government fantastic support and helping us through all the permitting process. Federally, we've got the NAIF engagement, which is going to be a key part of our funding strategy. So really well advanced in those discussions. Environmental approvals, as I've said, are going along really well. Next two are quite key. We've got an agreement in place with APA, who are the infrastructure providers to get gas to the site. So that's really important. That's one of the things that's helping us reduce those costs. We've gone for a lower capital, lower cost alternative with APA than what we had in the feasibility study. So we've got an agreement in place with them. And then importantly with FL Schmidt, who are the leading group in supplying the roasting kilns for the processing circuit. We've got a supply agreement signed with FL Schmidt for them to provide the kiln for our process for the Gabenintha project. So really important. And then I guess the ongoing engagement around offtake. But I guess, summing it all up, we are leveraged to critical minerals in a fantastic time to be in that space. The vanadium price is going up, and we're going to have massive demand going forward. Titanium is looking really good, and despite a little bit of a retrace of late in the iron ore market, still a very, very robust price there. We're all about delivering and doing the high quality work to enable that delivery. This is going to, as I said, going to be the largest vanadium producer in the world once we get to Gabenintha, so globally significant and a great place to be working on projects here in WA. So happy to take any questions if we've got some time, Tim.
Yes, Ian, we're going to jump straight into it. So we had a couple of questions come through about, the strategic partners that were mentioned in the quarterly. Another question come through about, have you, applied for any assistance from the Western Australian government for electrolyte production? So maybe you can talk a bit about that.
Yeah, look, I think that's as I said, key conversations with LE System around that. Where we're still at a stage where I guess we're developing what that relationship looks like. So we've had a lot of good conversations with the key government agencies here in WA about supporting that. But I guess the collectively LE System and ourselves need to finalise what that collaboration looks like, and then we can go back and talk about that. I don't necessarily think we need government support for the electrolyte business. We need government understanding of what we're doing and support from a permitting and approvals and that side of things. But the electrolyte business is not a significant capital investment. It's really just a fantastic way to add value to our product and keep it here in Australia.
Okay. Another question came through about what is the progress of the last drill results awaiting assay? So the pilot test work, I guess, that you were talking about earlier at the Yarra Bubba?
Yeah, so it probably refers to the RC drilling results. So I think, as most people would be aware, the West Australian exploration industry has been very active, and so all the laboratories are lagging significantly on delivery of results. But we'd be expecting the last of our RC drill results through by the end of this month. So if we can keep the labs to that timeline, we'd be looking to put some news out into the market early September with all the update of our results. And as I said earlier, that then flows through to the update of our resource model.
Excellent. And I'm sure we'll be looking forward to that. One more question about what's happening with the haulage roads.
So we've identified a haulage corridor to get from site to the Geraldton port. This is for the Yarrabubba concentrate product and the titanium product. We've been talking with the Shire and government agencies around using those access routes. Most of it is public highways, so that's not a problem. And now we're engaging with contractors around delivery of that service. We completed a logistics study earlier this year to understand all the metrics around that. It is a key input for Yarrabubba. The logistics costs, going from Gabonitha, where we were delivering small volume, high value product, and now we're going to a larger volume product. So logistics becomes a more important factor, and we're very much around that and engaging with a lot of groups. So I'd imagine, again, in the next, certainly obviously before the delivery of the feasibility study, but in the coming months, we'll be able to give a bit more colour around, who we're partnering up with in that space. But it's certainly a key focus for us.
Mm-hmm, mm-hmm. And Ian, I guess we had a couple more questions come through, but what we'll do is we'll link you up with the parties that have asked the questions, just because we've run out of time for today. But thank you so much, Ian, for your presentation and for taking our questions. Look, sorry, Daniel and Liam, we'll make sure that, we get the answers to your questions to you. But thanks again, Ian.
Thanks very much, Tim. Thank you.
Yeah. Up next, we've got European Lithium. We've got their chairman, Tony Sage. We'll be presenting, we'll be giving us a quick brief on the company. Tony, how are you?
Yeah, very good. Not as nice weather as we usually get in Perth, but it's okay. At least we're not in lockdown like the rest of Australia.
Oh, yeah. I think most of us tuning in today, under some form of lockdown, but Western Australia is a great place to be right now. Yes. Tony, over to you.
Yeah, look, if you can put the slide up of the mine, I think it's number 5. Slide 5 in. You just go through it, and then we'll go from there.
Yeah, you can get cracking for some people.
Yeah. Okay. So look, when you see the mine itself on the screen, you'll understand what I'm about to say. So this mine was built in the 1980s by the Austrian government. They were looking for, believe it or not, uranium for their nuclear power plant, and they found lithium. And unlike any other public mineral exploration company, being a government, they just built the mine. So what they did is they found the ore some 300 to 400 meters under, and they just built the attics and everything around it. So we've got about 1.5 kilometers of attics. I can tell you right now, it's on underneath a ski field. So if this was found today, it would not be able to be built under the environmental regulations. So fantastic for us that they were able to do that. We have a mining license already. So that's fantastic. There it is there. We've taken lots of people through it. We actually, because it was a mine and the access roads are fantastic, we actually mined 1,500 tonnes of spodumene some 3 years ago. And that's what I want to really talk to you about today, is the advantages that we've got because the mine was already built. Why did it close? Batteries were not the thing back in 1983 to 86. So the main use for lithium back then was crockery and high-end ceramic type material. But let's go back to why it's so exciting for us. So we were able to mine 1,500 tonnes. we gave 300 tons of material to Dorfer Anzaplan, one of the leading metallurgists in Germany, and they built a pilot plant. So we're the only player in Europe that's actually built and put through 300 tons of material through that pilot plant. What that told us was we had a very good high-grade lithium hydroxide product that we can produce at the end of it. So that was a big tick for us. Most of the other players around the world, if you look at it, what they do is they get their drill core and take a chunk out of the drill core, take it to a lab, and then probably would not have more than 1 or 2 kilos of material to put through the lab. But putting 300 tons through a pilot plant was a huge advantage for the company. Then the slight disadvantage that we had was when the Austrian government built the mine, they just went hell for leather, didn't do many drill holes. So what we can actually report is about 6 million tons of material, which is completely understated. So we planned a drill program back in 2019, and obviously with COVID, the drillers couldn't get into the country and drill. So we lost probably 14 months on the drill program side of things. Now the drill program started in March this year. The borders opened for Austria, so our Bulgarian drillers were allowed in. And basically what we're doing now is finalising. I think there's one more hole to go. We're down 350 metres in that last hole, and then we will go to get those assays. But what that means for Wolfsburg project is that we will be able to increase our reserves from 6 million to well over 11 million, so almost a doubling. But what that does is that gives the mine life up to 22 years from currently in the PFS that we've completed, about 9 years. So it's a massive, massive lift for the company. You can see by our close neighbours, the market cap of those companies are a lot higher because we're only reporting 6 million tonnes. Now, like I said, that will double. We'll probably be producing between 10 and 11,000 tonnes of hydroxide per annum. We think we can start within 18 months, within 24 months. The bankable feasibility, definitive feasibility study is ongoing. The last pieces of the puzzle are the final drilling work, some hydrological work, and the environmental report, final environmental report. We expect all that to be completed by Christmas this year, and DRA then will take over and get all the reports. They did the pre-feasibility study. Our pre-feasibility study showed an NPV of over 300 million US. But remember, that's based on the 6 million tonne figure, not the 11 plus that we think that we're going to get out of this program, which will be reported to by the first week of September, I'd hazard a guess. Also in the MPV calculations on the pre-feasibility study, we used a number of about $12,000 for hydroxide to get that number. Currently, the hydroxide price is around $14,500 to $15,000 a tonne. So there's a slight increase there. So the MPV calculation will go up significantly on the back of the completion of the DFS. So where we're at right this second, we've just completed a fundraising only yesterday to get us completely funded for the finalisation of the bankable feasibility study, which we think will finish in March. So we're now completely funded for that, and that was done only a couple of days ago. The lithium market was quite good. We managed to close that in about 3 hours. We only asked for 5. We got 6.5 in 3 hours. So the lithium market is quite hot. We're in a very, very good location. We're 45 kilometres from the city of Graz in Austria. The city of Graz in Austria is the main industrial area of Austria. Coincidentally, one of the biggest Samsung battery factories is in Graz. So we've had ongoing discussions with Samsung about some sort of collaboration. Nothing yet has come from it, but I see that as a big advantage. Most of the other players in the lithium market have an offtake partner, and some of those offtakes were done at different prices over a period of years. And we are completely unencumbered, so we can now, once the bankable feasibility study is complete, we can go to a BMW or a Volkswagen or a Renault or one of the other car manufacturers. In fact, there's so many different players in the market in Europe. Bosch, for example, is another company that's approached us, and we've had ongoing discussions with them as well. So having that unencumbered means that we've got coming onto the market sometime in 2024 between 10 and 11,000 tonnes of hydroxide. If you look at all the reporting that has gone out, most pundits are saying that the hydroxide price will increase. The market thinks so. Most lithium stocks are moving quite significantly. In fact, today, even after a raising, when you expect the price to go down, we've had a 20% increase in our share price just today. On the back, on the back of obviously this talk coming out, the presentation went out. A lot of people now know, and a lot more people are educated to ignore the 6 million tonne headline number for our deposit. It's a lot larger than that. Let me expand on that a little bit more. This drilling program will prove on the mine site that we've got already. We have a mirror image of that, where a few holes have already gone in, showing a slightly higher grade lithium on the other side of the hill. So, you know, there's plenty of upside for exploration to go after this. However, the thrust of the company will be to finalise the DFS with this drilling, get the new reserve number out, finalise, which I'll go through in a minute, the metallurgical work on another front, and then we will look probably getting the financing and building the plant, and probably in about 18 months to 2 years, once things are going, we will then start to drill the other side of the hill to expand our resource base. We don't really need that now. As I said to you earlier, 11 million tonnes will give us a 22-year mine life, so it's quite good for us. I just briefly touched on the metallurgy. We finished the report. We put 300,000 tonnes through a pilot plant. COVID then interrupted what we were going to do next. In our particular ore body, we have three byproducts: felspar, mica, and quartz. Now, what we did in the first lot of testing was to make sure that we can get to a battery grade hydroxide, which was proven. That's a big ticked off by Dorfer and the plan. The next step is to reduce our operating costs going forward. Now, between felspar, mica, and quartz, there's very good markets in Europe for all three products, and we believe we can reduce our costs by about $1,500 a tonne if we can extract those three products quite successfully. So the next phase of our metallurgical work is to do just that. So we believe that that will be completed by mid-September this year, and that will then feed into the pre-feasibility, the bankable feasibility study. Early indications from the first lot of work that we did indicate that those three products can be extracted quite easily in the process, but we need that final report to confirm that. So we got a big month and a half coming up with the finalisation of the drilling, the new reserve numbers, and also the new metallurgical work numbers on the byproducts. So that's basically where we're at the moment. DRA have been appointed as our preferred company to go ahead and do the bankable feasibility. They finished the pre-feasibility. We're using SRK to do all of the mining work, the mine plan, etc. That just needs to be refined a little bit from the pre-feasibility study. We see no issues on the environmental front. There's absolutely no issues politically. There's 3 levels of government in Austria. The local government is fully in favour, the state government is fully in favour, and the federal government has already given us some grants. So they're fully in favour of this mine going ahead. We've had a delegation from some green groups. Because it's lithium and because the whole of the concentration plant and the mining, there'll be not one bit of dirt coming out of the mine itself. It's all going to be built underground. Hence the cost is a little bit high, but we wanted to make sure there's no environmental problems at all. The only environmental issue that we may face is when you truck the concentrate from the mine to the hydroxide plant 7 kilometres away in the valley. It's an industrial valley, as I said before, with Graz at the centre of it. It's a low socio-economic area, believe it or not. There is some in Austria. High youth unemployment. So this mine plus the hydroxide plant will be a big boost for the local economy. They're hoping to get some downstream. They've contacted some battery makers. As I said, Samsung's already in Graz, but they've approached others to build a gigafactory nearby. That's what they're doing. We're not doing anything to do with that. Our sole ambition is to finalise the bankable feasibility, build the concentration plant and the hydroxide plant some 7 kilometres away. So government support, very, very crucial for us. In Europe, there's been about 4 funds now, totaling about 3 billion euros for green industries. We're part of that. We've made our applications, and we believe that a big chunk of our big raising for the plants will come from those sort of subsidies, whether that's an interest-free loan, whether that's a straight subsidy, whether it's a direct investment. We don't know yet. We've applied, and we have big support in Brussels and in the German and Austrian governments as well. All of them are waiting, obviously, for the finalisation of the bankable feasibility study. So that's where all our efforts are going. We've got enough money in the bank now to do that. We hope that we will meet our deadline, our self-imposed deadline of about March this year to finish that. And then we're off and running for our major fundraising, which if you look at our pre-feasibility studies, around 400 million US. That's split almost 50-50 mining to the hydroxide plant at the moment. But when we finalise the bankable feasibility, those numbers will become more readily available to us. On the financing side, we probably do half in debt. We've already put into the pre-feasibility study 50% of it in debt. The rest will come from either a prepayment with an offtake partner, whether it'll be straight equity and subsidies or interest-free loans through the EU. So we don't think we'll have any problems in raising the money, given where lithium is at the moment, and especially in Europe, with a lot of the supply chain now very, very heavily scrutinised. I think quite a few of the European car manufacturers have pulled out of the Congo for cobalt. They want to make sure that their product is safe, clean, and no slave labour, etc., etc. They're very, very big on that, and having a supply chain from the middle of Europe is going to help us enormously. I think that's all from me.
No, thanks for that, Tony. Thanks for walking us through that. We had a couple of questions that came through. I guess you've already answered the question about when we can expect sort of the bankable DFS, which is March 2022. When do you estimate, I guess, to close off the first offtake agreement? You know, obviously it's a strategic move, not to commit, but
that's a crucial one. Look, we've been in talks with 3 car manufacturers, an industrial group that want it. Obviously, I'm excluding all the Chinese offers that we've had, because one thing the Austrian government do not want us to do is export concentrate to China. They want to build the hydroxide plant in Austria. So that's a big no for us, having one of those partners from there, but we've been offered. So we could have had a sugar hit, taken a offtake partner, not go to the market and dilute our shareholders. But in the end, I think we're going to be in a very strong position. We're not going to do anything short term. I'd say we want to wait until at least December this year, when we all know what the internal. We obviously know what the numbers will come out in the BFS before it comes out officially from DRA. So we'll have our own calculations, and then we'll start having meetings with various companies from that point.
Yep. With the PFS completed in 2018, the IRR is roughly 25% pre-tax. That was based off, what pricing was that based off again?
That was based on 12,000 for hydroxide. So we're at 14.5, 15 now, and most pundits say it'll go through 18, 19 before the end of the year. But the key to that, it was based on 6 million tonnes. So we're going to double that in 6 weeks. We know the ore's there. We followed the seam, going back upwards, but until you get those numbers from an SRK to verify, we're still only allowed to say in our JORC is 6. But we know we're going to get that. So once that doubles, and the price, you can put in a new price on your hydroxide, the $300 million US dollar figure is just going to be meaningless in the PFS.
Yep. And I guess in relation to the rest of Europe, as well as the different lithium projects out there, how does the Wolfsberg mine compare?
Well, look,
intensity-wise.
I think because the mine's built, we've got a big advantage. I think I'm not going to name any other company, but there's troubles in Spain with the locals that don't want something to go there. And obviously we would have that problem as well if the mine wasn't built, because what are you going to do with 5 to 10 million tonnes of dirt to build the ASX? Where are you going to put it? And that was the problem. But because it's built, we've got a huge advantage. And like I said to you early on, because we've managed to mine 1,500 tonnes, we've got a lot of material to play with. I think if you go back to Orocobre, they built their plant, and I think it took them 18 months because they didn't have a pilot plant going early. It took them 18 months to get the material out. Now, fantastic, successful company now, but they had hiccups in that period of time. We're going to have from Dorfranza plan the exact plan to extract what we need to extract, including the byproducts.
All right. Well, no, thanks for walking us through that and for taking our questions this afternoon, Tony. We're going to move on to Vault Resources, but thanks again for taking the time.
Thanks, guys. Thanks for listening. Bye-bye.
Catch ya. Bye. Right. Up next, we've got the graphite producer and developer, as well as gold explorer, Vault Resources. The ticker on the ASX is VRC. Recently acquired 70% of ZG Group in Eastern Europe to service the EU-based car makers and the renewable energy sector, but they also have graphite projects in Tanzania and prospective gold projects in Guinea. We've got the managing director, Trevor Matthews, on the line with us today. How are you, Trevor? Sorry, Trevor, let me ask you to unmute there.
Sorry.
There we are. All right, we can hear you just fine now.
Yeah. Thanks, Tim. And I guess potentially introducing Vault to the people looking in on the webinar, and I'd like to thank Sparks Plus for the opportunity to talk about Vault today. So actually, I might as well get into the presentation. So I'll just
sure thing. Yeah, we've got a lot of questions that came through beforehand, actually. So let's see if we can do the presentation, and then get to those.
All right, and I'll be flicking through this at points pretty quickly because, just in the interest of time and trying to stick to the allotted time. So just quickly get into a bit on the corporate overview. So Volt's market cap, as at the close yesterday, was 78 million. Got 2.4 billion shares on issue. Over recent periods of time, we've been trading quite strongly, and that's been reflecting the acquisition of Zavaleski in Ukraine, and I guess the expectations that the benefits that will flow from that acquisition. We're looking forward to progressing to becoming a globally significant graphite producer. So, and that's based around this acquisition in Europe, becoming part of a broader strategy for Volt to develop basically an integrated supply chain in graphite, servicing the lithium-ion battery industry, and of course the connection there is to the EV and renewable energy sector, but also there are other downstream graphite products which are quite high value, and we'll be developing opportunities in that area as well. But I guess the main interest is in the lithium-ion battery opportunities that present themselves. So aligned with developing two mines, well, not developing two mines, but the acquisition of an existing mine and processing plant in Europe, the development of our Tanzanian Bonya project, and then building out some downstream capacity in both Europe and the United States to become a fully integrated supplier. Part of the benefits we get from the acquisition of the Zavaleski project are its experienced operations and technical staff. It's been in business for 87 years. Obviously, the original staff aren't around, but we are acquiring a very experienced operating business, European customer base, excellent supply chain in Europe, and so a lot of operating and marketing history there. It is a turnaround asset. Make no bones about the fact that it's an underperforming business. We've acquired it from 3 private shareholders, our 70% interest, and there's a remaining 30% private shareholder. Limited or virtually no capital investment, not a lot of work on strategy or plans about the future, apart from some work done on becoming a battery anode material producer, but pretty difficult for them to implement it with their previous ownership structure. So Volt coming in opens up a lot of opportunities for this business, and got to say that the response from other participants in the more broader market and the contacts that we've had since this transaction was announced and since we've completed the acquisition has been really, really positive. So we've also become members of the 2 key European Union sponsored alliances, the EBA, the European Battery Alliance, and the European Raw Materials Alliance, and there's significant facilitation for the the development and securing of the battery mineral supply chain in Europe. We have a large greenfield project in Tanzania, so we don't want to forget about that. We're getting pretty good progress on our funding discussions, and we see opportunities, with the development of that mine to basically provide feedstock for, as I said, downstream processing opportunities in both the European and US markets. I won't be spending much time talking about gold today, but we obviously have 3 gold projects in auger exploration programs that have been now nearly completed, just waiting on assay results, and we'll make some announcements in relation to that activity over the course of the rest of the year. So we've grown value in the company, and there's still significant value growth to come, but through acquisition with the Zavaleski project and through development with our plans for Tanzania. Like I said, I'll probably just talk to the graphite business for the rest of this presentation. So Zavaleski, people shouldn't think that this mine is near the end of its mine life or anything, even though it's been operating for a long period of time. it's actually got significant resources remaining. So it has a very long mine life, and there is very excellent expansion potential at Zabaleski. So, so this isn't about just buying, the current earnings profile. This is strategic about buying an asset with a large resource base, the largest graphite resource base in Europe, one of the few, and being located right next to where all the growth in the lithium-ion battery manufacturing facilities and the EV markets taking place. So fantastic location, and we also get a lot of benefits leveraging this business in relation to the development and financing and development of the Bornu project as well. Already produces some high value purified products at 99.5%. That's one of the processing steps to produce battery anode materials. Got to go a little bit higher than 99.5, but there's only minor changes to the existing circuit to be able to achieve that. This business can generate material cash flow. It just needs some investment to improve the performance of the business and some changes in the way that it operates and manages and makes decisions. So that's where Volt can add value for limited or no cost, is just by changing the way that they currently operate and plan. So we see a lot of low-hanging fruit, I guess, in terms of creating value in this business, along with opportunities for investment that would create significant value. And the current plan is to get into production of anode material by 2022. Our new graphite project, development ready, large scale project, biggest resource in Tanzania, one of the biggest in the world by tonnes. It's got a two-stage development strategy. We're currently in the process of funding stage one. Starter project, and really stage one is about facilitating the much bigger financing and development of stage two, but there's a lot of de-risking undertaken. It's an easier funding pathway where you're looking at about $40 million of funding required to get stage one into construction and operations. So we've seen that as a logical sort of first step, and in fact feedback from most groups is that is the pathway for the company to follow. The larger project would if developed, would make Bornu one of the biggest graphite producers in the world. We have offtakes in place for stage one, a lot of interest in stage two offtake when it comes. All of our key approvals are in place for both stages 1 and 2, so a pretty quick pathway through to the expansion project. And you can see the economics there for stage 1 and 2, but clearly the company's plan to sort of make its way through to the much larger development, which would provide feedstock at the right time for the expanding requirements of graphite for battery anode material. So we can address all the main sort of markets, from the traditional markets in refractories and metallurgical products to expandable graphite for flame retardant building materials, foils, and various other uses. And then, of course, the spherical graphite, which is basically the battery anode material. Europe is now the leading EV buying or EV sales region in the world. Went past China last year. We'll maintain that position based on forecasts, and we're talking about exponential growth in these markets. I think the US will be a lot stronger, with the Biden administration now making a lot of changes in terms of, well, not just changes, but investment in facilitating the growth of the electric vehicle market through charging stations and subsidies. So there's significant growth in the market. Just another forecast, and the main point of interest here is that we're talking about a 7-fold increase in supply needed by 2030. This is UBS, one of the leading investment banks in the world, and they just did a first principles sort of study in relation to EV production, battery demand, and materials required for batteries, and produce this analysis. So you can see that a much larger sort of base of production, natural graphite requirements still increase or need to increase sevenfold over the next 9 years. So significant increases in supply needed. Part of the reason for this, when you have a look at this image here, and one of the benefits of being in Europe with our Zavaleski project, is the build out that's going on in battery making or cell making facilities. So you look at the capacity increase down the bottom of the graph, you're talking about a 20-fold increase in battery making capacity in Europe at these various locations, and others that are probably still on the planning stage. And Ukraine being right on the edge of the EU there, just above the Black Sea, is in a fantastic location, has free trade agreements and lots of facilitation in terms of developing its raw materials to feed the demand that's coming. So the opportunity Zavaleski is really, about its resource base and long life that it currently has had and still is, yet to develop in terms of its large resource base. So expanding annual production to meet expected increase in demand for battery anode materials is a key part of the strategy for Zavaleski. It's got existing graphite products, more traditional markets, as you can see on the screen there, and it produces a high value green purified. It doesn't use hydrofluoric acid, which is what is used a lot in terms of purification of products. It uses other chemicals to achieve that, but they're less toxic and have less environmental issues than what is used in other locations, particularly China. It's got near-term plans to become a graphite producer, strong facilitation from Europe, which we'll talk about in a minute. And just a bit of information about its product or regional split. And as you'd expect, it's sold a lot of product into Europe, 70% into basically the EU, 14% domestically, which is interesting. And obviously supply chains are a big issue for graphite and other products for that matter. I guess one of the things that's become apparent leading out of COVID is risk around supply chains. So developing feedstock that is very close to your manufacturing or further customer base is really important these days, and a lot of concerns around shortening that supply chain because of the disruption that happened last year. The other topic that's getting a lot of discussion at the moment is carbon produced in ocean transport in particular, but and in other forms of transport. So carbon footprints are becoming a pretty important sort of aspect of I guess end users, i.e. the motor vehicle manufacturers and the cell makers, when they're looking at supply sourcing, have got to actually look for where can they source material with the least carbon footprint. So having a business right on the doorstep of Europe is pretty important. So that's sort of one of the key benefits we see going forward in terms of the acquisition of this business. Image there of the graphite mine, the bit of an overview. I think one of the key sort of points of interest when we looked at this mine was around the resource base. It wasn't around its current performance or its, or profitability. It does make small amounts of positive cash flow at the moment, operating sort of well under its nameplate capacity. But, it's got a mining license out to 2035. And as I said, a multi-decade operation based around its current known resource base. And it does have exploration upside. So, there's further potential there. Pretty conventional sort of setup. It's open pit mining, pretty low strip ratio of 2:1 historically and going forward. It uses conventional drill blast, load and haul for mining, back to a fairly standard processing circuit, which is outlined on the next page. Great transport infrastructure, as we mentioned, which is, I think, important, as I said, for when you're benchmarking this business against other overseas businesses and not only the cost of transport, but as I said, carbon footprints in relation to that transport and supply chain reliability are important aspects of for end users to be considering. And I think this business ticks a lot of boxes for that European battery industry. Mentioned about the leveraging the benefits of this in relation to commissioning and ramp up and other training opportunities that we'll get from for Bunyu when we move that project forward. And it is making a difference in relation to the discussions that we're having with banks in Africa. We acquire some freehold land, which is where all the facilities and mine are located. So I think that's a pretty significant benefit as well in terms of ability to operate in a reasonably straightforward way with not a lot of landowner or access issues. It's a general view of the plant there. Unlike plants that you'll see in Australia, everything's inside buildings because during winter it gets down to about minus 20 or 30 degrees. So consequently, we don't see tanks and various bits of equipment just sitting out in the open and without shelter. So what you'll see in these sort of locations in Europe is a series of buildings with everything located inside. So it's very hard to get those sort of shots that you might see of plants in warmer jurisdictions. So bit of an outline of the processing steps there, but very standard, crushing, grinding, flotation, then dewatering, drying, and a bit of classification and packing going on. And so very standard, very simple operation, pretty easy to expand and pretty easy to, we think, turn around and become a pretty strong performer, both from an operation and a financial perspective. Facilitation through the EDA and ERMA is a pretty important aspect of being in Europe. The EU is very keen to see the facilitation, very keen to facilitate the development of the European battery value chain, both from a security sort of point of view and continuity of supply, as we mentioned earlier on. So these two organisations provide benefits in terms of industry connections and facilitation to potential customers. Both have financing platforms available to members. So, we see this as part of the opportunity of the membership is to, as part of our plans for investment in the Zavaleski business, is to tap into the funding facilities that are available or introduced, and supported and facilitated by these two alliances. So membership provides a lot of benefits at a technical, regulatory and financing level. So we're happy to be a member of both and look forward to participating pretty strongly in both of those organisations. The Ukraine signed a critical raw materials strategic partnership as well, so there'll be further benefits that flow from that. Just conscious in the interest of time to get through the presentation. This is available on the ASX. It was lodged this morning, so I'd encourage people to have a look at the presentation. I won't talk too long about Bunyu. We've been working with this project for a number of years, but it's now got to the point with the current market climate, pretty strong interest from banks now with the improving graphite prices that have occurred late last year and into this year. And of course, the growth in the EV market that everybody sees and expects to continue, that is driving a lot of interest in the financing of this project. A significant value, you can see some of the metrics there from a pre-feasibility study. So we'll do a final definitive study for the expansion project during the construction of stage one, but the financial metrics you can see there at post-tax NPVs of up around $890 million for this project, average annual EBITDAs of close to $200 million make Bunyu a significant project in its own right. But combined with our European project and locations, and like I said, our strategic vision of developing two mines and an integrated supply chain to be delivering battery anode materials in Europe and the US, two of the top three lithium-ion battery markets and EV markets in the world, we think is a pretty compelling strategy. A little bit of information there about battery anode material production, runs you through the various stages there, the 4 stages that are required to develop it. So investing in Volt, I think provides an opportunity to be part of a pretty unique company in terms of the strategy that we've now got in place, and through, based around the acquisition of Zavaleski Graphite, but building on that, developing the mine in Tanzania, and now working on the downstream processing opportunities and other value add opportunities that we can get from not only the battery anode material, but other products that can be made from graphite and are high value opportunities. What we offer is security and continuity supply by developing an integrated business or supply chain based around our 2 mine development strategy. And we think our projects, both Zavaleski and Bunyu, are scalable. So as we see increases in demand over time for graphite and battery anode material, we should be able to respond to that and become a significant supplier in that market through developing our projects. Pretty experienced management team. We've developed and commercialised projects before in junior companies, and so we see significant shareholder growth from the activities that we're undertaking, the implementation of our strategy. So I keep saying we've never been in a better position with Volt than what we are now and what we see in the future. So some contact details there, and we're happy to hear from potential investors and shareholders. So, but as I said, make sure you check out our website and also our the presentation that we released this morning under ASX code BRC. Okay, thanks, Tim.
Yeah, no, thanks for that, Trevor. We will just jump straight to questions. Someone asked anonymously, when are the upgrades due to start, and what's their expected timeline, and how will they be funded?
Okay, look, we've got building out a plan for a stage sort of process. So we've got some changes in senior management occurring at the moment. Settled this acquisition a couple of weeks ago, so it does take a little bit of time to just transition in some new people. We see that as key. We want to sort of create a bit of culture change in the organisation, and and introduce some better structure around their planning and decision making. I think that will help with also accessing funds for the capital improvement programs. So we have a number of improvement projects in mind, but initially we think there's some low-hanging fruit just in the way that they change the way that they do business. The improvement projects probably go to things like just making the plant more reliable. So there'd be some minor capital investment in equipment there. In fact, there's probably not enough time to run through this, but I'll say there's a series of projects which the company will announce in the future that will be relevant to improving the project, improving the product mix, so producing more coarse flake material, which will improve your average revenue per tonne and therefore improve the bottom line. But it's also about the implementation of the downstream processing strategies. So, funding for all of these activities are no different than funding a greenfields project. So, but in our case, we're expanding a brownfields mine, which is actually a bit easier to fund. So as they're cash flow generating, I think, your opportunity to debt fund those is pretty strong. And you've got historical information and a brownfields operation to sort of leverage from, whereas doing greenfield financings can be, more difficult, as we've seen with Bunyu, and they can take longer durations. And the facilitation and support that we're seeing in the EU, we think there's opportunities to tap into funding sources through, the EBA and the ERMA as well. And clearly the EU wants to see their development banks, such as the EBRD, European Investment Bank as well, really out there providing funding to enhance the development of their supply chain. And this is one of the few graphite projects in Europe, and it's, as I said, the largest by resource base. So I expect it's clearly going to get pretty significant support from the EU organisations, or the EBA and the RMA, and their associated investment platforms. So I think it's more, a process of, these activities will be underway. We'll make the appropriate announcements, and I think people should, also take into account the strategic nature of what this company's doing, and the opportunities that exist right at the moment at our current market cap, to become a shareholder investor and participate in what we see as significant sort of value growth through the implementation of this strategy.
Mm-hmm. Mm-hmm. I think earlier you touched a little bit about the Bunyul project and its funding. Obviously we have a lot of Vault shareholders on the line right now, and some of them pre-submitted questions. I think we had about 6 questions asking if Trevor, you could talk about a little bit more in a little bit more detail how the Bunyul funding process is coming along, and what are the different options that you guys are considering and looking at.
Yep. Look, I think along the way we've mentioned that we're in discussion with African development banks, and that's probably the key group that has continued with those discussions, and now pretty advanced. I'm probably a little bit restricted in terms of what I can say, just in terms of just exactly the point that we're at, but we are getting close to getting a credit approved offer of funding, and I have been indicating that in terms of talking about that. I must admit it's a slow process, I've got some. In particular, a friend who works out of London in one of the big law firms and does project financing, and he advised me that they do turn up and they do provide the funding. They eventually get there, but it can be a long process, and unfortunately that's what we've had to go through. But we've now completed the DD prior to getting an offer, so we expect this to come to a conclusion pretty quickly. So in terms of the funding mix, dominantly debt funded, as you can imagine, with I'm talking about bank discussions, so this is conventional project finance, but we're also having discussions with another group about project level equity as well as part of the funding structure. So they're pretty advanced, but too early to really sort of say what the result of that would be. But a combination of some project level equity investment, so not through Vault, but down at the project level, but dominantly made up of debt funding to put together the $40 million funding that were required for the development.
Yep, great. I guess, well, back to things in Europe. Someone asked if you could talk a little bit more about the development schedule for, the Zaleski side of things, and if you have any orders for the Zaleski mine.
Well, it's got customers. It's selling products right now, so into the traditional market. So we outlined during the presentation. It's too early at this stage to be, I guess, discussing about orders for downstream processing or battery anode material. Suffice to say that we've had contact from a number of groups and battery makers about the potential for battery anode supply from particularly Ukraine. I think once you get into that producer status, those discussions are significantly different from when you're still developing and some years away from being a supplier. So we're in the process of developing out those plans, and it's the interesting thing about downstream processing. it's got probably a quicker pathway to get to production because mines have a lot of work to do to basically get to a financing and development phase, whereas a plant where you're basically sourcing or identifying a location and then just really building a facility to house it in, which might already exist, and then just it's equipment selection. So building that out and then recruiting a team to do it's a lot quicker process. So getting into production by probably late 2022 in a small scale way in Europe, and also developing plans for the United States as well and in downstream processing. Is a reasonably quick pathway to get there, but it's a lot as we flesh out those plans and can provide samples as well to customers. Then you'll start to build out some discussions around potential offtakes from that battery anode strategy. So a little bit early stage yet because we've got a little bit of work to do at front, but we're actually progressing with that now. And now that we've got our interest in Zavaleski bedded down, the ability to go on and have some pretty meaningful discussions and planning and start to put in place the engineering and studies to eventually build those facilities is progressing.
Yep. And I think when you said April 2022, sort of start to ship product out, which products was that? Was that the spherical graphite, or is it a different kind of? Are you planning to roll it out in stages, or?
Yeah, it's we can make the business already makes purified graphite, so the opportunity there is to get into a higher grade, and purification is one of the processing steps for battery anode material. But the actual battery anode material is probably more than it's about a 12-month program from beginning to end. So when we first started, I guess this transaction, we might have been talking a little bit early in the year, but I guess now where I'm talking is second half 2022 for the commencement of SPG production in a small scale way, and starting to send shipments, basically trial shipments to start with. There's a fair bit of qualification. Yeah, which is undertaken as part of becoming a supplier to a cell maker. And they'll have blends as well. So, it's not all natural flake produced SPG that goes into an anode. There's synthetic graphite, and there's a little bit of silicon, generally speaking, in terms of the composition of the anode. So, which the cell makers sort of tend to hold as a pretty closely guarded secret. But building out that, undertaking that process to become a qualified supplier, and then, expanding your production once you get through that qualification process and becoming as we see it, or as we plan to be, a pretty significant supplier both in Europe and the United States, and built around our own graphite production from Zavaleski and in the longer term from Bunyu.
Mm-hmm. Yeah, I only asked because I think someone was inquiring about when the SPG would be could expect to be shipped. Another question came through about, I guess, the current cash balance that was put out in the quarterly. How are you planning to fund, I guess, short to medium term?
Yeah, well, in the quarterly we made the comment that we're evaluating different options. So unfortunately we weren't able to progress with our original funding, which would have seen us quite well funded after the consideration payment being completed for Zavaleski. So we're just looking at alternatives now around debt, some incremental debt to top up on the existing facility. Obviously equity raisings are in the mix, and really that's your two bookend ways of raising funding. And then there are mezzanine facilities and that in between. So Zavaleski, because it's a cash flow generating business, though, does have the ability to debt fund its own investment based around those cash flows. So what it doesn't do well at the moment is put itself in a position where it can access those sort of forms of financing. So like I say, with some changes in leadership there, some improved financing resources, and shifting to more transparent sort of reporting and more meeting sort of more international standards, I guess, in the information they do report, and even their accounting, which is not in accordance with the international accounting codes. So there's some things there that we can change. Like I said, there's some low-hanging fruit here, and there's opportunities to improve the way that it actually operates and manages itself, that can open up a lot of doors in terms of access to funding, and the opportunities to put in place, facilities that, and by that I mean debt facilities that are funded by the cash flows generated by, those investments, and by its existing sort of cash flow coming from the business. So I think, that's a pretty standard way of, moving forward in terms of looking at how you might fund, a business of this type where it's already in operation, and the opportunities to provide funding through those means. As far as Volt's corporate costs go, they're relatively minor in the overall scheme of things. So, our requirements aren't significant. We've stopped our program. Well, our program of exploration is now in a bit of a hiatus in Guinea, so we don't need really much funding to keep that on foot. And Bunyu's funding pathway is really around the development banks and this project equity level funding that we're sourcing there. So we've got quite good funding strategies in place that we're working to. But we had a bit of a hiccup, recently, but, we're going to rectify that and get ourselves, in a well-funded position over the course of the coming months.
Yeah. And I guess probably a good last question to wrap things up. What is your general view on the share price between now and the end of the year? always a tricky question, but
I generally get caught out with these sort of predictions. I know in my mind what we should be valued at, and I guess I look at comps, in terms of what are some of our peers valued at, and I just can't help but think that our market capitalisation is leaves the business quite undervalued relative to what we have and what we've got in front of us in terms of our strategy and the opportunities in front of the company. And they're no different than our peers, by the way. Nobody's, built a plant or a downstream processing facility yet. They're sort of, most of them aren't funded yet for their project developments. And, we've already got an operating mine. I think people are underestimating the value of that acquisition. I think they're just looking at it in terms of what it currently does and how it's currently performing. But like I said, this is a strategy around, building out an entire, integrated supply chain for graphite products, not solely for batteries, but, obviously fairly dominantly driven by that. It's got the biggest single benefit from the acquisition, or the main sort of item that I was looking at when we were looking at the acquisition was the resource base. Now, unfortunately, it's Russian code, and most people probably don't know that ASX has pretty significant restrictions in terms of reporting of foreign resource numbers. So you've got to do a fair bit of work to be able to release it to the market. But what I can say is it's significant. And that was a key factor in terms of the board's decision, Volt's board's decision to acquire this project. And, being an operating business, as we've outlined, all the other benefits, being located in Europe, and, we talk about supply chains and, like I said, carbon used in logistics, and, really important from the point of view of how you look at the value of this business, and all the facilitation that's going in Europe to expand the supply chain. So, there'll be a lot of motivation to make sure that Zavaleski becomes a much, much bigger producer of graphite and graphite for battery anode material for the lithium-ion battery and the whole EV, market. So I'm really confident about the pathway we're on. I think our share price here should be a lot higher, and I think investors, if they're prepared to, or if they take into account what's going on in our sector, what's going on in new energy, renewables, electric mobility, what's going on in Europe, and recent announcements around climate change and carbon reduction, and this is driving all of the interest and investment that's going on in particularly in Europe, more than any other destination. And we are there, we're right in the heart of it. So I think the opportunity for Volt is exceptional.
Yep. And I think your shareholders would agree. It's been a real pleasure hosting you, Trevor, and NVRC. I think of all the attendees today, I think 50% of the attendees made up of Volt shareholders. So good show of force there, Trevor. But thanks for taking the time to walk us through the presentation, and and with our questions as well.
Yeah, great, no problems. And thanks again, Tim, and thanks to Sparks Plus for creating the opportunity to present today.
Awesome. No, thanks, Trevor.
Excellent, thank you.
Well, that concludes our mining day today. I just want to give a quick thank you to all the presenters from Theta Gold, Technology Metals Australia, European Lithium, and of course, Trevor from Volt Resources that we just spoke to. Look, if you've got any more questions for any of the companies that presented today, we're always happy to put you in touch with them. Send through your questions to us, and we'll try our best to put you in touch. As always, it's been a pleasure, and we'll catch you in the next webinar. Thanks, everyone.